Welcome to Generational Wealth. In this video, we will go over the 99% versus the 1%. So now, some say when it comes to Forex, the percentage of traders failing is 90% to 99%. So why is that percentage so high? I mean, the main reason I would say is because most traders who try Forex doesn't get it because they're misled. So they constantly blow accounts, and then eventually they just quit. So I mean, the percentage is so high because they quit, but why are they quitting? Why is the percentage so high? Um, and the reason why, I mean, it's simple. When you think about it, when you actually think about it. I mean, for some people, it's easier to understand, uh, some not. So when you think about, for example, when you first decided to learn Forex or learn a lot of things, I mean, just anything. When you nowadays in this technology era, in this area we in now, um, most majority people go to Google, YouTube. You go on social media to learn how to do something, to learn a hack, to do a DIY, to get some kind of skill. Uh, and if you think about it, that's what 99% is doing. So when it comes to Forex, 99% of the people is looking on YouTube or Google and trend lines, Google and support YouTube and support resistance, how to draw support resistance, YouTube Forex basics. Is going to teach you the basics of the norm, the basics of the masses, the basics of what everybody else mind frames at. So it's going to teach you in the 99 percentile. Hope hope you still with me. So it's gonna teach you. I'm preaching to y'all. I'm dropping gems. So listen, the 99% is getting taught a certain way because they're all doing the same thing. They're programmed. It's programmed. So the 99% is going to Google, going to YouTube. They might pick up a book uh, on trading. There's tons of books out there you can pick up, and majority of the content you're going to get from it is going to be like the 99%. So, and the reason I say that is because if you think about it, it's true. All the information out there is going to teach you the same way. So now you're trading like the 99% instead of the 1%. Who is the 1%? How can you trade like the 1% or the 10%? How can you trade like them? First, you have to understand, of course, the 99%. So when I learned Forex for my first time, I was trading like the 99%. I was trading that way. That's because I did exactly what I just said, what everybody else does when they decide to learn Forex. They go to all the social media platforms and just type in Forex, and they get that information and they run with it, and they start to pick up other strategies and indicators from other traders on YouTube that's also pump faking uh, in this market, and also encouraging and telling the same lies where they will find anywhere else. So it's a lot. I say that's why the 99%. That's why the percent is so high. So the 1% apparently is the one who understands the way this market is moving and who controls this market, obviously. So the 1% that's controlling this market and moving it in a direction it wants is going to manipulate the 99%. Why? Well, because that's how you take their money. That's how you make them blow their account. Because when they blow their account, 1% is profitable. So when the 1% who controls this market decides to manipulate you, is going to show you a certain pattern that the 99% studies. So you get what I'm saying? The 99% studies certain patterns such as support and resistance, break and retest strategy. The 1% is going to trick you, I should say. It's going to trick you once it gets to that point of that support resistance retracement trend line. It's going to trick you every time because that's what the 1% does. It is going the opposite of what you're taught. So half the time we're making Forex way more difficult than it should be. We're making it way difficult when it shouldn't be at all because we're focusing on the wrong things. So as far as the 1% goes, and I got up here, you see right here, it says 99 lies and 1 truth. That just goes to say that there's 99 ways to tell a lie, and there's only one way to tell the truth. So when someone spreads a lie, you know, the lie can change. Somebody might fabricate the lie. Somebody might somebody might just be over exaggerating the lie. Somebody might leave out and add on to the lie. But when it comes to the truth, it makes sense. The truth makes sense. The truth is right there. The truth is simple. And also there's only one way to explain the truth. So when learning Forex, you have to understand there's only one way to show you how to do this, how to trade the right way, and not like the 99%. So when I'm doing trainings with students, and I have to explain to you, and they be like, "So this is what you look for, and that's it, this and that, that's it." I'll be like, "Yeah, what else do you need?" Like, it's simple. The 1% is simple, but it's so confusing to the 99% because of the program, the brainwash of you learning a certain way, and then when you get tricked, you don't even understand you're getting tricked half the time. So you just keep trying, and then eventually you quit. So for as far as that 1% goes, that one truth, that one way, there's not multiple ways to trade this market. There's not. You don't need a whole bunch of indicators and Forex strategies. The Forex fundamentals is the basics, and I'm going to show you the basic Forex fundamentals, what you need to know. For example, you need to understand the Forex sessions, of course, which the main 3 sessions we focus on will be Asian session, London session, and New York session. We know the characteristics of those Forex sessions as well: Asian consolidation, London breakout, and New York reversal or retracement, right? So, of course, we always want to know the Forex session. Now, what else is mainly important? Understanding session breaks, I would say. Understanding the days of the week. Right here, I got the days of the week here at the bottom. Of course, each day, each one of these vertical lines is our session breaks, which represents a day of activity in the market. So understanding that, you need to understand the higher time frame training, the higher time frame zones. So let's look at the higher time frame on a daily, you know, the weekly, where you get to see what's really going on in the market. We see a lot of the liquidity down here at these lows right here, right now. Could this pair possibly start to be bullish? You need to look at the higher time frames first before anything. Always. That's what tells the story. The lower time frame is not telling the story. That's where you get in on your interest. So higher time frames, what's going on? What do you see? Identify your trend lines. Identify your all the stuff you need to identify is gonna be you need to identify it on the higher time frame, right? Once you identify on these higher time frames, the picture starts to get clear. Now, does the market move in the way the 99% thinks as far as support resistance? Yes, you will get those moves, but the only reason those moves happening is to keep inducing the 99%. You have to understand, if they would just keep tricking them out their money, they wouldn't traders wouldn't keep getting in the market, they wouldn't keep trying. They would just quit and stop after they blow one account. They keep blowing accounts and doing it because the market lets them, tricks them into thinking, okay, support and resistance does work. You just have to look for this and this and that, such and such, and use this indicator. So they will trick you into thinking, for example, a support and resistance zone, like right here, you get your support, then it breaks, and then retest. So traders thinking, oh yes, yeah, I do understand, I get it, whatever the case is. But of course, this is the higher time frame, and majority of new traders are not trading off the higher time frame. So higher time frame, understand that. Understand the days of the week. Understand the Forex sessions. What session are you trading? What session do I explain in generational wealth you should trade? London in New York. Asian session is consolidation. We don't want to trade consolidation. We want to stay in a trade up and down for whole bunch of sideways activity. So understand the days of the week, of course, that's understanding the daily and the weekly structure of understanding the basic when a day begins in a week or a midweek reversal when a midweek reversal occurs. So higher time frame, find that trend line. I got a downtrend, right here. Looks like could possibly get stronger. This is on a daily. So this is a couple of days of activity. Go down to the 4 hour and look at this. On the 4 hour, we see a strong downtrend. You go down to the 1 hour where majority of the people are trading 1 hour and lower time frames. So all this activity we got is just a whole bunch of uptrends, downtrends, uptrends, downtrends, over and over, right? We got an uptrend, we got a downtrend. We got an uptrend, we got a downtrend. But overall, it's inside an overall downtrend. You need to understand that. You need to always look at that higher time frame to see what's going on, because it's going to tell you what to do. So in order to trade like the 1%, you have to know what the 99% are doing. So that time I spent learning the 99%, I thought was a fail, actually became success to me because it taught me what I should not do. So it helps at the end of the day, because I guess coming into the market and learning just the correct way without understanding the mindset of the manipulation part, then it could be a little tricky as well. But at the same time, you have to understand that the 1% is moving this market looking based off this higher time frame. So some of the I guess some of the strategies that the 99% teaches is the support and resistance, the three touches to a trend line, and then the market pretty much changes or shifts, or it confirm. I'm sorry, three touches to a trend line confirms the trend. So a lot of people think the trend's gonna continue or whatnot. Actually, we can bring it down and look at it just like this. So when you look at it right here, look at this trend line. That would be our, we could count this as our first touch or our second touch. One, two touches. This could possibly be three touches to a trend line. That confirms there's going to be a strong downtrend. So a lot of people are going to continue to look for sales, and then they sell off of these trend lines as well because they see it occurring. So the plan is to look for the manipulation, find the manipulation. That's how you trade like the 1%. Find where are they tricking the 99%? They trick them based off of support resistance lines. They trick them based off of the trend lines that's occurring over and over. They trick them based off of the daily and the weekly structure. So I mean, in order to get better at identifying what the 1% see in 99% is due to back testing. You got to back test 3 to 5 times a week. You have to back test in this market. You have to be consistent of knowing what the activity and what's going on. The manipulation will be easier once you go to higher time frames and box it all down, because now we see all this activity that's going on inside here on a higher time frame, and now on a lower time frame we can start to make our analysis and take positions, easily take positions. So just looking at this, it might look choppy and all of this, but once you understand how the market moves, it gets easier. It gets easier. So you gotta understand this is on a 1 hour. I'll just stay on the 1 hour for now and do this and just show you some how the difference in the mindset is working. If this is on a 15-minute, people are looking at this right now, they'd be selling us. Midweek reversal is Wednesday, Thursdays. We look for those. The changes trend right there. That's what a trend changed. Now it's not gonna always be what people are gonna be looking for actual trend, long trend. Like you have to identify what's going on and what they're doing and when they're buying and when they're selling. They were selling, maybe reversal came, everybody was looking for a sale. They seen a little trend line. Once retail traders get an opportunity to play some trend lines, they start to do it. In strong areas like these wicks coming up in exhaustion, they think that's all indications of reversals. So they played off of that. They were selling off of this trend line. They're not expecting, not aware of the midweek reversals in the weekly structure. So the market shifted up for the rest of that week. Look what we got. We got Monday, Tuesday, Wednesday, Thursday, Friday. We got this for trading. Okay, we got that for trading. When did this move really happen? It happened off the low of Monday, Tuesday, Wednesday. It finally happened. That was the move right there for your week. That was the move for the week. Friday, you could have took a position right here. It looks like that happened at London session, or I guess it was at New York session. It induced up, broke out of 8. London broke out to the high of New York off of Mondays, Fridays, last week high. But as you get what I'm saying though, Monday to this is it. So in that time frame for that week right there, Wednesday was the best trade setup for this week. The rest of the week, look what it did. It just kind of consolidated a little bit. Maybe reversal came. That was the move. Friday, you could have caught that move too as well. But for the most part, you're not trading every day in this market. You're not trading every day. The moves are not happening every day. That's why you have to understand the midweek reversal, and then is understanding these Forex sessions, as well as all this is going on. This 1 week right here where the move happened. Look what else. When does this move happen? When did it happen? Should you buy? At what session? Look, and I draw this all the time on my chart to show people what you need to do. It's simple. Box your Asian session, box it all the way until the beginning of London. Mark London, mark your New York session. New York is in the blue, London is in this red, pink, whatever color it is. Right here, look right here, this candlestick right here, right at this blue vertical line where New York opened. Right off the low of Monday, Tuesday, Wednesday, New York session, it reversed. That was the move for the week. Also, not only was that the move over 200 pips for the week, right there, it happened right at New York session. That's another thing, guys. You got to understand that to be like the 1%, you got to also understand when is the time to enter your trade and get out. You only have like 4 to 6 hours, like 4 to 6 hours between London and New York session to take a trade. That's not a lot of time throughout the day. So you're spending so much time, spending all that time trying to trade all day and trade Asian session when that's consolidating for like 13 hours, 14 hours, 15 hours. It's consolidating. You ready to trade up and down instead of understanding and boxing all this Forex shit down and understanding when to take the trade and what is the manipulation going on. You have 4 to 6 hours to do that. That's not a lot. So it should be a lot simpler to find your entry between 4 to 6 hours. And I say that 3 hours per trade. You can say 6 hours. 3 hours for London, 3 hours for New York. You got time to get in and out of your trade because the moves have happened. So it's like people do not know how to find the move, don't know where to find the move. I'm showing you over and over. It's one truth. It's one way to show this. There's not 99 ways to show the truth. There's 99 ways to show a lie. So I cannot just keep sitting here and trying to exaggerate the truth, try to change it. There's no change. There's one way, So that's what you get. It's raw, uncut. There's nothing else. You have to understand these sessions. That's when you take your position. That's when you take your entry. That's when you take your entry. At these sessions, around these sessions, you got 3 hours from the opening to get in the market. Understand these. So I hope this kind of helped kind of clarify a lot, or just the conversation alone should kind of help you get a better thought frame of this market and what to look for and how to try to change your perspective of the market and go more like the 1% instead of the 99%. Like I said, there's the highs and the lows. You got the higher time frames, you got the trends, the higher trends, the days of the week, the session breaks, and identifying these zones, identifying that is it. You don't all those indicators is not gonna help you learn Forex better. Back testing will help you. Back testing these basic Forex fundamentals. So if you haven't seen, I got a video on how to back test, a video on how to chart. I mean, it's simple. There's plenty of videos I got on there that shows you the basics. And like I said, if you understand, if you have been a part of Generation Wealth, you know that there's one truth. There's one way. I explain this over and over. And people constantly look like, man, is there another? Is there this to do? What do you do? And I'm like, this is what I do. Like, it works. Why change what works for me? And I try to explain it in a different way to people, but it's like I said, there's one truth, So anything beyond that is I'll be lying to you guys, and I'd rather continue to show you the 1% than to trade like the 99%. So Thank you very much for listening. Have a good night.